Welcome to Al Stock Trades. In this video, we're going to be doing a fundamental analysis of Warren Buffett style intrinsic value calculation on the Disney stock. So by the time you leave this video, you're going to know what's on the earnings report, know what they produced, and know the set of price targets that are fundamentally sounding for the value of the company. As you can see, like a lot of stocks in the 1 year, Disney has been down 40% over its 52-week high of $187.58. Currently now, it's trading $100 in the pre-market. So what are the outcomes here? Disney, in their Q2 non-GAAP EPS, they reported $1.08, but they missed by 11 cents. Revenue was $19.24 billion, and they were up by 23.3% year over year. However, they missed $800 million, right? The Disney Media and Entertainment distribution brought in $13.62 billion, and they were up 9% year over year. However, the Disney Parks Experiences and Products brought in $6.65 billion, and they're up 109% plus year over year. Now, don't get it twisted. That was because it's coming off of the pandemic lows, so this number will stabilize. However, what's new, what happened in the pandemic was that the Disney Plus subscribers went up to 137.7 million versus the 129.8 million that was in Q4 of 2021. Now, going a little deeper, let me make me smaller here. Going a little deeper and talking about the outcomes of the Disney Plus. Disney Plus added 8 million subscribers to reach 137.7 million versus the 134, which we talked about. Across the services, it includes Disney Plus, ESPN Plus, and Hulu. Disney now has 205 million direct-to-consumer subs versus the rival Netflix recently shrinking at around 221 million, right? So that's their competitor, right? In fact, CEO Bob here reaffirmed that the company's target for 2024 is anywhere between 230 to 260 million paid subscribers, which is definitely trying to overtake Netflix here, especially with the price points. Now, overall, if you look up Q4 2020 and then Q1, Q2, Q3, and Q4 of 2021, all the way up to now, Q1 of 2022, here is Disney Plus, ESPN, and Hulu, and you can see this is constantly increasing. And just look at these jumps. ESPN Plus doubled literally from Q4 of last year, now has doubled its from 10 to 21 million subscribers, and also Hulu going in. And a great way to visualize it is I have this graph for you, so you can kind of see Disney Plus is just literally plowing out, and ESPN Plus is slowly growing, and Hulu is just doing Hulu. And I think that's when Kim Kardashian's their show is on that one. I don't personally watch, but I have a girlfriend here. So, all right. So if you look at the revenue here, and if you analyze it, and this is where I'm going to be a little bit down here. So the revenue is great. It's been consistently growing, went from 42 billion. Again, these numbers are in millions, 42 billion to 72 billion at the most recent. And, that's great, right? But look at the gross margins, 21%. Okay. 45%. Great. Right. It's going up. And then all of a sudden now, 2019, not even pandemic, you see the gross margins slumped. And then it's just getting worse. And now they're trying to build it back up. So that gross margin's kind of worrying me. I want it a little higher. It means that they're keeping less of their money. Now, if you look at the operating margins, it's been continuously going down, okay? So we got to take a look at that. That's something interesting. And if you look at the net income, it starts off very strong. In fact, Disney's stock price was doing really well, and now it's going back to that value of where it was before. But look at the net income from 2012 all the way up to 2021. We're going from 5 billion, 6, 7, 8, 9, hell yeah, 9 and 12, 11 billion. And then 2020 pandemic, the net income just shrank. And now we're at 2 billion, 3 billion. So it's wanting to go up to that transcend. So what we can do is we can find the value of the growth of Disney from this perspective here, and then we can recalibrate. But I wouldn't, at this starting stage of the video, I'm going to do the calculations as follows. We're going to be looking at the book value, and that's a more honest way of looking at their growth. So the book value went from 22 to 47.74 off of the 2021 year. Their free cash flow has been going down. If you look at it here, went from 8 billion, right? Then 2019, it slumped, just like we saw that gross margins. This was not during the pandemic, so why did it slump? And now, again, they increased some cash on their free cash flow, but then all of a sudden, 2021, it doesn't look good for their free cash flow. But we're going to use all their numbers to calculate our value of the stock. But first here, we're going to look at the book value calculator to calculate the short-term growth rate, because I can't use net income. It's going down. I can't use revenue because, it's not a growth stock. So we're going to be using something that is a little bit more mature, which is their book value, which is stating that we're going to take their book value, their current and their old, and what this is saying is it's growing at 8.863%. And that's what we're going to be using, right? And by doing that, it just it doesn't round it up. It shows that it's rounded up, but it's still that decimal point that we saw that we integrated here. And what we can see is the price points, looking at the intrinsic value calculation, we put in the free cash flow, and you can see it's been going down. Using a 10 to 15% discount rate, Disney stock hovers anywhere between $38.28 all the way up to $66.68 for the bull. And that's obviously off of the $100 price target. So we're going to do another calculation, and this is using the 10-year federal note. And as you know, the 10-year federal note has been increasing the treasury yields, right, because of the whole interest rate hikes and whatnot. So if we use the 10-year, we're at 2.91. So within our Mastering Stock Market course, for all the members that are watching, we're going to be going ahead and doing 9 years, and we're going to take the old book value and the new, which, remember this number, we already calculated this. However, now, do you remember how Disney has dividends? We're going to go back to their dividends here, and this is their dividend payout. We're going to be using all that information to input into our book value calculator. And by doing all that, then taking the 10-year federal note directly from the treasury yield, again, this is a Warren Buffett type of analysis. We like to just give you it real here. We're getting a share price of $92.28. So that's the value of the Disney stock, and anything over that is is overvalued. So it's just a little too risky. So that's something personally at these levels I wouldn't buy it. I mean, I think there's other undervalued stocks out there. Now, if you go into our brain machine, which is our proprietary technology, which you can find at lstocktrades.com, this is not an updated stock price. This was pulled in the pre-market, and again, the market needs to open for the stock price to register at $100. But looking at the our intrinsic value calculation that you can search any stock automatically, which pulls in stock beta, which is the downturning of the stock market, you're getting $113 value. So you can take all these and add to your collection. But remember when the stock price was over $150, $187, and I'm sure analysts were pumping it up. Again, you can't listen to those. You got to do your own intrinsic value and know the fundamentals of the business and look at the numbers. But anywho, if you like this, here's my dog. Her name is Coco, but I think I'm naming her Moo. If you like 5 free stocks, there'll be a link down below. The perks of these is you get free level 2 data with other brokers charge. You get short selling data as well as a bunch of artificial intelligent monitoring tools to help you as a trader and long-term investor as well. Likewise, if you like our platform and evaluating stocks and want to check out our products, we've been featured on Bloomberg Market Watch, NASDAQ, Benzinga, Yahoo Finance, and so many other amazing platforms because of our mission, which is democratizing financial information for all retail investors so they don't get fleeced by Wall Street. You can find us at lstocktrades.com. If you enjoyed this video, please consider liking, subscribing, and hitting that notification bell as it helps with the YouTube algorithm. It was my privilege and honor. God bless you, and I'll see you on the next one.